Expedia Group, the online travel platform Expedia.com, Hotels.com, Vrbo, Orbitz, and Trivago, serving travelers and lodging partners across the globe through a unified B2C and B2B travel technology stack.
FY 2025 revenue $14.1 billion. Q1 2026 revenue $3.43 billion beat estimates. Adjusted EPS 196 crushed the 125 estimate. Highest Q1 EBITDA margin in 15 years.
Expedia launched in 1996 as a Microsoft division, one of the first online travel agencies. It spun off as an independent company in 1999 and built a portfolio of brands through aggressive acquisition.
Hotels.com, Orbitz, Travelocity, and Vrbo were acquired in the 2000s and 2010s, building a multi-brand portfolio targeting every traveler segment from budget to vacation rental.
CEO Ariane Gorin took over in 2023 and refocused the company, cutting costs, simplifying the technology platform, and rebuilding profitability to drive the margin expansion now showing in Q1 2026.
Business to consumer generates approximately 85% of revenue: hotel, air, vacation package, and car bookings through Expedia.com, Hotels.com, Orbitz, and Vrbo.
Business to business contributes 15% through Expedia Partner Solutions, providing white-label booking technology and inventory access to airlines, banks, and travel management companies.
FY 2025 revenue $14.1 billion at 22% adjusted EBITDA margin. Gross bookings of $120 billion, each booking generating merchant fees and supplier commissions.
Q1 2026 revenue $3.43 billion beat estimates. Adjusted EPS 196 beat the 125 estimate. Gross bookings $35.5 billion, up 13%, highest Q1 EBITDA margin in 15 years.
Booking Holdings, Booking.com, Priceline, Kayak, OpenTable is the dominant global competitor with stronger international exposure and higher market share in Europe and Asia.
Airbnb dominates short-term vacation rentals. Expedia's Vrbo competes in that segment. Google Travel and direct hotel booking are structural threats to all online travel agencies.
Expedia's moat is brand portfolio depth. A traveler who doesn't book on Expedia.com often books on Hotels.com or Orbitz, keeping the company in the transaction regardless.
Expedia operates globally, with US generating approximately 60% of gross bookings, Europe and Asia Pacific expanding through Hotels.com, and Vrbo international growth.
Vrbo serves 3 million vacation rental listings across 50 countries, the primary alternative to Airbnb in the North American short-term rental market.
Ariane Gorin became president and CEO of Expedia Group in May 2023, previously president of Expedia for Business, where she built the B2B travel technology platform.
Gorin holds degrees from Northwestern University and HEC Paris. She joined Expedia in 2018 after career roles at Microsoft and SAP, a rare CEO who came up through the B2B side of travel technology.
Expedia Group, the online travel platform, $14.1 billion in FY 2025 revenue, with Expedia, Hotels.com, Vrbo, and Orbitz capturing traveler spend across every segment and the highest Q1 EBITDA margin in 15 years.
Q1 2026 revenue $3.43 billion beat estimates. Adjusted EPS 196 beat the 125 estimate. Gross bookings $35.5 billion, up 13%. Expedia's profitability turnaround delivering.
Expedia beat Q1 2026 revenue estimates by nearly 15% and delivered an EPS surprise of almost 40%. The online travel recovery is real, the operational turnaround is showing results, and the company's B2B and loyalty investments are paying off. Today we break down what is working at Expedia and what risks remain as the platform competes with Google for the future of travel discovery.
Expedia Group was founded in 1996 as a division of Microsoft and went public in 2011. It operates a portfolio of travel brands including Expedia, Hotels.com, Vrbo, and Trivago, as well as the Expedia Partner Solutions business serving airline and hotel partners. The company is the second largest online travel agency globally by gross bookings, behind Booking Holdings. Its competitive advantage is breadth: flights, hotels, vacation rentals, car rentals, and activities through a unified platform.
The business model is take rate on gross bookings. Expedia earns a commission or markup on every hotel night, airline ticket, or vacation rental booked through its platforms. Revenue is a function of gross booking volume and the take rate, the percentage of each booking that flows through to Expedia's income statement. The platform business benefits from network effects. More supplier inventory attracts more travelers, and more travelers attract more suppliers to list inventory.
Revenue for Q1 2026 came in at $3,426 million, up 14.7% year over year. Analysts were expecting approximately $2,960 million, a more than 15% beat on the top line. International travel volumes and strong lodging demand across all markets drove the outperformance. Q1 is traditionally a seasonally softer quarter, making the magnitude of the beat more impressive.
Earnings per share of $1.96 beat the consensus estimate of $1.41, a 39% positive surprise. Gross profit was $3,049 million, for a gross margin of 89%, reflecting Expedia's capital-light, software-driven business model, where most costs are fixed technology infrastructure rather than variable inventory. Operating leverage was substantial in the quarter.
The B2B segment, Expedia Partner Solutions, is the most underrated part of the business. This white-label platform provides booking infrastructure to airlines, financial institutions, and enterprise travel managers who want to offer travel booking under their own brand without building the technology. B2B customers include American Express, USAA, and numerous international airlines. The B2B revenue is high margin, recurring, and growing at double-digit rates as partners deepen their integrations.
One Key, the unified loyalty program launched across Expedia, Hotels.com, and Vrbo, is Expedia's answer to the customer retention problem. Historically, each brand ran a separate loyalty program, which meant customers did not accumulate points across the portfolio and had limited incentive to return to Expedia family brands for their next trip. One Key changes that by making every booking on any Expedia platform earn points redeemable on any other platform. Early data shows meaningfully higher repeat booking rates.
CEO Ariane Gorin, appointed in 2023, the company's second female CEO, has been executing an operational turnaround focused on technology efficiency, marketing ROI, and platform unification. She took over from Peter Kern, who had stabilized the pandemic-era business and has been accelerating the platform integration strategy. Q1 2026 is early evidence that her approach is working. The EPS beat reflects not just top-line strength, but improved cost discipline.
Ariane Gorin previously served as president of Expedia for Business and built the B2B segment into the significant contributor it is today. Her deep product and partnerships background gives her credibility with both technology and commercial teams. Analysts have been encouraged by her direct communication about cost structure and her focus on sustainable profitability rather than growth at any cost. The Q1 results validate that approach.
The bull case is travel structural demand. The travel market has proven remarkably resilient. Consumers prioritize experiential spending even when they cut back on goods. International travel has fully recovered and in many corridors exceeded 2019 levels. Expedia's global inventory and the One Key loyalty economics create a flywheel that, if sustained, could generate consistent mid-single-digit gross booking growth for years, with operating leverage amplifying that to double-digit earnings growth.
AI is the near-term investment thesis. Expedia has been embedding AI tools into travel discovery, natural language trip planning, personalized hotel recommendations, dynamic pricing transparency, and early conversion data suggests these tools improve booking rates for complex itineraries. If AI-powered search pulls customers from Google into the Expedia planning experience, it could partially mitigate the existential Google competition risk.
The bear case is Google. Google's travel search capabilities. Google Hotels, Google Flights, direct booking integration make it the starting point for a growing proportion of travel queries. Every user who books directly through Google rather than clicking through to Expedia is a lost commission. Google's AI-powered travel planning features, announced at its developer conference in 2025, are a direct competitive threat to the OTA model. The structural shift of search to AI chat could be particularly damaging.
Vrbo recovery is a risk to monitor. The vacation rental segment underperformed the broader business in 2024 and early 2025 as the post-pandemic short-term rental glut normalized. Vrbo faces competition from Airbnb, which has a stronger brand identity in the vacation rental segment, and from boutique direct booking platforms. Q1 2026 showed some improvement, but Vrbo needs sustained recovery to avoid being a drag on overall group results.
On the balance sheet, Expedia carries moderate net debt from past acquisitions and its stock buyback program. Free cash flow generation has been strong in the travel recovery environment, and the company is returning capital through buybacks. The capital structure is manageable given the asset-light, high-margin business model. Management has guided toward reducing net leverage over the next 2 years as the business continues to generate cash.
The bottom line, Expedia delivered an exceptional Q1 2026. The operational turnaround is progressing, travel demand is strong, and the B2B and loyalty investments are showing results. The Google risk is real, but not immediate. For investors who believe travel is structurally growing and that the OTA model remains viable as a convenient platform for complex itinerary booking, Expedia is trading at a significant discount to booking holdings on a multiple basis, and Q1 suggests the execution gap is narrowing. Expedia's brand portfolio strategy is both a strength and a source of complexity. The company operates Expedia.com, Hotels.com, Vrbo, Orbitz, Travelocity, Cheap Tickets, and several international brands. Each targets a different traveler segment. Vrbo for family vacation rentals, Hotels.com for hotel loyalists, Orbitz for price-sensitive bookers. The challenge is that maintaining separate technology stacks and loyalty programs for each brand is expensive. CEO Ariane Gorin has been consolidating technology infrastructure and rationalizing brand spending, a move that is initially margin dilutive but should improve free cash flow conversion by 2027.
The vacation rental market served by Vrbo is the highest growth segment in Expedia's portfolio. Vrbo competes directly with Airbnb for the whole home rental traveler. Airbnb's network advantage is real. It has more supply globally and stronger brand recognition among millennial travelers. Expedia's advantage with Vrbo is in family travel. 3-bedroom vacation homes booked for a week generate higher gross bookings per transaction than a single-night urban apartment booking. Vrbo's gross bookings grew at 17% in Q1, outpacing the overall Expedia business, which signals healthy supply-side additions and strong family travel demand.
The loyalty program consolidation under one key is the most consequential strategic bet Expedia has made in a decade. One Key allows travelers to earn and redeem points across all Expedia Group brands, a feature that no competitor offers at scale. If a traveler books a flight on Expedia.com and a Vrbo rental, both transactions earn points toward the same reward. The theory is that cross-brand stickiness increases lifetime value and reduces the customer acquisition cost that drives Expedia's elevated sales and marketing spend. Early One Key adoption data has been encouraging, but full impact will take 2 to 3 years to materialize.
Expedia's multiple at roughly 11 times forward EBITDA is low relative to its online travel peers, but the discount is not irrational. The company has historically underperformed booking holdings on capital allocation and margin management. The Q1 beat suggests that operational improvements are gaining traction, but investors want multiple quarters of evidence before re-rating the stock. The near-term catalyst is the Q2 booking window. If summer travel demand holds and B2B corporate travel recovery continues, Expedia has the operating leverage to deliver earnings above consensus. That is the trade. This is financial education only. Online travel involves cyclical demand sensitivity, technology competition, and supplier relationship risk that require careful individual analysis. Consult a licensed financial professional and review Expedia's SEC filings before making any investment decision.
Ooh, we do! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.